Maverick traders. This is Rob Reinhold. I'm joined by Ankit Sharma, and here we are, the Currency Room. I cannot believe we're into November. We have like 6, maybe 7 weeks until the entire year gets closed up. So we've had a great trading year this year. This has just been, I think, the best trading year in almost a decade. Ankit, when's the last time you remember a year being this good?
I mean, I think it's when it comes to like the active day trading, I think this has been one of the best years. I mean, if you really look at trading versus investing, we have other years where it's been more complacent, things been more on the lower end when it comes to the twists and turns. I think this year has been one of those years where we've had many of those twists and turns. We've seen these 20% rallies that kind of getting sold off, and this whole year has been just like a push and pull kind of a year.
The thing I like the best about this year was when things start to move, they've trended very hard and very one-sided. If you remember the first part of the year, how bad the euro was. I mean, the euro just went straight down for like 6 months, and the dollar has gone up pretty much all year long. Like, the trends have been really strong, which is great. All right, well, let's get into last week. Let's cover what happened last week, and then let's get into the next week. We had a pullback in equities. So we had a rally over the last couple of weeks, 2 to 3 weeks in a row, and this week we got a sell-off, and we're literally back between the moving averages. Now at Maverick, we call this the no man's land, meaning it's not a good signal for a long, it's not a good signal for a short in equities. We don't like to get real directional when the market is between the 20 and 50-day moving average. Part of this pullback was the dollar was strong the first part of the week, and yields went up for most of the week. We had a huge drop in dollar on Friday. So the dollar for the week pulled back, but the pullback on the last part of the week was almost 2%. And the dollar basically closed flat for the week. So we had up 2%, then down 2%, big moves. The big story this week was the FOMC. They raised rates as expected by 75 basis points. And when they released their statement, the market loved it because they put in a little bit of wording that gave the market some hope that they were getting to the end of the rate hiking cycle. So the market actually rallied for about 30 minutes until Chairman Powell got to the press conference and basically said, no way, we're not done. We're going to keep hitting it. And the market turned down, gave up a 2% gain, and then closed down 2%. So Wednesday was like a 4% intraday reversal in equities. Now, here's the funny thing about this. Typically, we would have seen crypto sell off with the rest of everything else. They didn't. They stayed bullish, really strong. So we liked cryptos last week. We like them again this week. We think they're going to likely outperform. Let's get into the news because, holy cow, I cannot remember a week with this much news. Let's start off first with the RBA. The RBA rate statement, they raised rates as expected by 25 basis points. And they were actually a little bit more dovish than the market expected. So the Aussie actually suffered a little bit after that. Then we got the JOLTS report. Now, we've talked about the JOLTS report, and this is a report that no one has ever cared about, ever. I've never cared about it. I've been doing this for 25 years, and I've never cared about the JOLTS report until this week. And it's because Chairman Powell specifically said, we want to see job openings numbers lower. The number came out on Tuesday, and it sunk the market because that number, 10.72 million, was way hotter than expected. And so that sent the market down on Tuesday, and then we get the FOMC on Wednesday, raised by 75 basis points. But again, in that press conference, Powell crushed the market again. So the market ended on its lows on Wednesday. On Thursday, we sold off some more. And then we got, Friday, a pretty messy day where we were up 2%, down, up 2%, down. Crazy. Let's finish up with the news. We heard from the Bank of England, and they did exactly what was expected. And the pound sold off this week. Pound was the worst currency this week, even though the central bank rose by 0.75. They basically said that they're worried about their economy, and people are thinking, okay, well, maybe that is it for the BOE. And then, of course, first Friday of every month, we have U.S. and Canadian employment reports and payroll reports. And we met live during this, and the number was super hot. Take a look at the headline number, 261. However, the unemployment rate jumped back up to 3.7. Last time we heard the payroll report, it was just the exact opposite. We were at 3.7 and we unexpectedly dropped down to 3.5. This month, we were at 3.5 and unexpectedly jumped back up to 3.7. The market didn't really know what to do with this report right off the bat, but the market ended up saying, hey, this is good. The unemployment rate went up. And so the markets actually went up 2%, and the dollar just got crushed all day on Friday. So let's go and take a look at the numbers from last week. And here we have the actual numbers. If you take a look at it, S&P basically gave up everything it gained last week, down 4.6%. Take a look at the VT. Now, this is the world index. The world index was only down 2%. I'm going to show you a chart of the emerging markets index. The emerging markets index was actually up 2% on the week. So a lot of cross currents are happening. And this is really what Ankit and I, we've already discussed this. There's lots of cross currents happening. So we have some parts of the world that are risk on, some parts that are risk off. We have crypto that's looking fantastic, up 7%. Gold and oil had a nice move up. This is a strange week. And like I said, it's very, very mixed. Let's take a look at the S&P chart. And this is what we're talking about. We are in this no man's land. We talk about anytime we're here. And look what's happened. The 20-period moving average is flattened out. The 50 is still coming down a little bit. There's not a great signal here for where the market is going. Now, if we had a green candle on Friday, you could make the case that this was a nice bull pullback. We got the doji. And if this candle was just green, that would be a really solid buy signal. We pulled back to an area of support. We found that support and we bounced. I would be telling everyone, hey, you know what? We're probably going to make a run up to 390 here on the S&P or the SPX. The SPY. The fact that this is a red candle, it is just messy, messy, messy. So I'm going to just put this on hold and just say, I can't figure this out. And Ankit, I mean, we talked earlier about this. I've been doing this for 25 years, and you've been doing this for close to 15 now. Sometimes you just can't figure it out. What do you think?
Absolutely. I mean, that was one of the things, as we were kind of just putting together the currency room. This is one of those times where well, I have no idea what's going to happen. It's, these are situations where one just, catches up with the other. So I'm like, we don't know if the market's just going to catch up with everything else or if everything else is going to follow the equity markets, which is, again, heading lower. So I think it's very interesting. Again, it doesn't happen that often, but then there's times during the year where you just have no idea. And I think this is where we are. If I have to really take a bias, I have no bias because nothing makes sense. So,
and let me throw in a little bit more into the equation here. On Friday, so like I said, Friday, look at this big red candle. If you take a look at the internals of the market, that means how many stocks went up versus down. It was close to 60% of all stocks went up on Friday. That's showing you that there was really just some weakness in some key spots. Apple had a bad day. Tesla had a bad day. Some of the big stocks that are weighted in the S&P had a bad day. But when you take a look inside, like I said, we had world equities that were pretty good. We had emerging markets that were quite good. On Friday, we got this big sell-off, but more stocks went up than down. And again, the dollar went down, but yields went up. I'm telling you, I've been doing this for over 25 years, and this is a very, very mixed picture. And I'm with you, Ankit. I don't think there's any real reason to stick your neck out and say, one way or the other. Let's just wait and see. And there's also one thing I want to talk about is we have the United States midterms coming up, the elections this next week. If you take a look at seasonality patterns, and we've talked about seasonality patterns all this year, the 6 months going into the midterm election are the worst 6 months of all the years in history. When you look at the average, that's the worst period of time, 6 months going into a midterm. The best period is the 6 months after the midterm election. Now look, these seasonality patterns, they don't happen every year. And look, everything looks really, really bad. I think if you were to make that claim that you think the market's going to have the best 6 month return over the next 6 months, you'd probably be crazy because, You take a look at everything that's going on, it's pretty bad. But we can't ignore the fact that we are entering into a seasonal strong period. And I'm looking at this whole market. I'm not totally convinced we're going to go significantly lower. That's just my bias, but I need to see the data. I need to see the charts reflect that. Right, let's get into cryptos here. Cryptos had a decent week. Bitcoin was up the least, still up on the week. But this is a really good number because when equity markets go down 4.5%, remember in the spring, we saw cryptos were going down 10% a week when equities were weak. Now we're getting cryptos strong in the face of weak equities. I really like how this is shaping up. Litecoin just had a killer week, but take a look across the board. Strong week in a weak tape. We take a look at our cryptos. First thing that pops out is the pound. The pound sold off quite a bit after the BOE, but take a look at that Kiwi. We came into the week with the premise that the Kiwi was the currency to be long, and sure enough, it paid off pretty much all week. So we had a lot of traders long in Kiwi, so lots of great gains this week, especially on Friday. Take a look at this dollar. The dollar was flat for the week. It lost almost 2% on Friday, which means it was up almost 2% the first 4 days of the week. We'll take a look at the charts, but again, killer movements. Just a great week. And I don't think we're going to see a week like that again in a while. That week had so much news that we looked over the calendar. That news was insane last week. This week, we don't have a lot of news. We just don't have a lot of news. And if we check it out, you can see there's not a lot on the calendar this week. Other than the US CPI on Wednesday, that's it. And we even have bank holidays on Friday. So I think this week is going to be the opposite of what we just saw. I actually think this week is going to be a mellow week, lower volatility, and I think you want to be less active this week than you were than the week prior. If we take a look at where we are here, we are below the 50-period moving average. We're at the 20, the 20-50 aren't sloping. So technically speaking, we are at a -1 on U.S. equities. The S&P, we took a look at the chart. I actually want to take a look at the EEM chart. Now, earlier I said it was up 2%. Actually, EEM was up 5% on the week. And then take a look at this candle on Friday. Remember, the candle on the S&P on Friday was a big, fat, ugly red candle that lost all of its gains. Not on this. This is basically holding its gains. It gapped up 3% and it held it. Now look, we're not in bullish territory, but I just want to show you that if you just take a look at like what the NASDAQ is doing, it looks ugly and you could be very bearish. But if you take a look at other places, you can see it is not as bearish as the NASDAQ is pointing out. So come over to cryptos, and cryptos just had a wonderful breakout. We're running up into this upper resistance here, but cryptos are showing us bullishness. We have other areas of the markets that are showing some bullishness. It's a mixed bag. Like I said, it's just a mixed bag. Going back to the calendar, Wednesday. Wednesday is going to be the best trading day by far. I highly recommend you be active during that. That CPI report is going to be a big deal. That's going to move the markets quite a bit. Other than that, I can't really tell you I have a strong call on equities. To sum up this week's outlook, equity markets, mixed signals. The only signal I think is clear is that technology stocks are likely to go lower. That's really all that I can say. Anka, do you have anything to add to that? Any words of wisdom there?
Yeah, Rob, I wish I could add more, something that would be more helpful here, but I think we're all in the kind of same boat here. And again, just trying to figure things out. It's almost like you're sticking your neck out. And again, this is where it's almost like a coin toss to me. I mean, this is a conversation we had earlier. I'm like, I'm not sure if the big tech or the big company is going to bring everything down, or if we just see a recovery, we're just going to see a massive rally. I mean, there's just a lot of questions to be answered. So what's the best thing to do when you have this situation? It's better to just wait and watch. Again, next week would be another crazy week, and we have the CPI that could, again, cause a lot of movement. So I think this is where, not really married to any outlook. I think I'm just kind of wait and see which way the markets can really go, and then I think that will be the direction. But, one of the things I want to add here is that the markets are fighting back. which again we haven't seen. We have seen like these movements throughout the year, but overall, like I think now still the negatives are there. The Powell came out and just talked the market down, and but again, despite all of that, the markets are fighting back. So I think that's a good sign, especially for a lot of traders. They're just sitting on the sideline because they just don't like that volatility, or just don't like the market hasn't gone anywhere. So I think this is a bit of an optimism for some of those traders that are looking to get back into the market. So I think once the dust kind of settles, we'll be able to see which way the market's going to go.
And I think this week the key is to look when we call these macro trends. Macro trends is the big picture. And macro trends have really driven the markets this year. Equity markets falling, dollar rising. That's a very macro thing. We've been playing that. Right now, the macro picture is very mixed. So whenever you have a time where the macro picture is mixed, you can't play the big macro trends. You just can't play them. What you can do, though, is identify very specific areas in the market that are showing relative strength and weakness, and you can play those. And that's literally, I think, what you need to do this week is you need to find the one or two currencies that are marching to their own beat and play those and ignore the rest, because I don't think you can figure out the macro picture at the moment. Maybe next week I'll have a better call on it. You'll have a better call on it. But right now, I think you just have to identify what's working here. So let's start off with cryptos. I've been very negative cryptos pretty much all year. I am no longer negative cryptos, and I actually think cryptos look pretty good here. Bitcoin briefly tried to break out above the 21,000, and it was knocked right back down on Friday. So until we clear out of this range, I can't be bullish on Bitcoin until we get above 21,000 and we hold it. So for me, Bitcoin looks okay. Let's see if we can find something that looks better. I come over here to Bitcoin Cash, and this looks much, much better. We've already cleared out of our last little swing high, but boy, a lot of resistance up here. A whole lot of resistance up here in the 122, 124 area. So until we can just hold above there for a day or two, I also think Bitcoin Cash is not quite there. I like it. I think if a trader said, Rob, I want to go long it, I'd say, okay, I'm going to wait a little bit, but I think it looks good here. Let's see if we can find something that is actually looking much better, that's cleared out. So here we have Ethereum. We've got resistance right here at the 1620 to 1640 level. And you can see once we clear out of that, we've got nothing until about 1800. I think that Ethereum is much closer to breaking out and coming into an area where we can move up to the next resistance level. So I do like Ethereum more than Bitcoin Cash, and Bitcoin would be number 3, if you're ranking 1, 2, 3. Here's Litecoin. Litecoin had a huge run this week, huge volume. All right, I don't chase things like this. I just don't. And I know that I may be missing out on the best currency this week, but I don't chase things that have gone up, 30% in a week. So if this thing can base and pull back, I'll be in it. I'll be a buyer. But until that happens, I will be a spectator. I may watch it rocket substantially higher, and I'm okay with that. I want to play things that fit my trading style. So on cryptos, I think Ethereum is the best looking one out of the bunch for the next week. Let's go into foreign currencies. Now again, the macro trends, and hopefully everyone understands what I mean by that. The big picture of all the money in the world sloshing over and being moved, by all these things. I think that is so messy here. I think you got to find very, very distinct currencies that are doing something. Like again, cryptos are doing something right now that's very different than what the rest of the market is doing. I take a look at the dollar. It's between the 20 and 50 period moving average. It has failed miserably here, but we are setting up a potential head and shoulders pattern. So here's the neckline. Here's the neckline. Again, this is the dollar basket that we look at, the dollar equally weighted against the 7 other currencies. I am really kind of licking my chops here on short dollar. Here's the problem. I don't have a signal yet. I don't have a green light to do that. I'm going to start the week off not looking at dollar trades. If we can break below this point, I am now more interested because, again, we'll be below the 50-day moving average. We'll be below this neckline. And everything is going to be telling us to be more bearish than bullish on dollar. But I'm going to start the week off. I cannot pull the trigger yet. Come over here to the yen. The yen is still in this low base. We had one day that it tried to break out on a very weak equity day, and you can see the second the equities got any sort of strength, the yen came down. I also like the yen on the short side. It's got a little bit of room to its next support level, but if it breaks that, this yen is going lower. Okay, what's your opinion on yen?
Hey, Rob. Well, I would say not much has changed about the yen. But if you just take a look at this week, I mean, dollar and the yen, they're kind of doing the same thing. And, if you look at, post that intervention that we had by Bank of Japan, I mean, like this dollar yen really hasn't gone anywhere or done anything. So I think I don't really have a strong call on the yen. I think yen looks equally bad as look with the US dollar, but we've seen more rallies in the dollar that we have seen in the yen. So I think there's better currency to trade. Honestly, I think I'd rather trade something else that's showing more consistency, more of that, more of the relative strength of weakness, rather than trying to figure out what the yen's going to do. Because again, just like this week, we have seen times when the dollar was weak, yen was actually strong. So I don't want to see that, because now it just going with the opposite correlation with the US dollar. So I think I'd rather stick with other currencies that are showing more
Speaking of other currencies, what do you think about the franc here? I mean, so we've got a 2050 moving average cross. This thing has already broken below. What do you think about Swiss franc this week?
I mean, I still like Swiss franc to the short side, honestly. And I mean, we have seen, Swiss franc done really well this year, and it's really losing that. This week we had these the inflation figures from Swiss as well, and that was actually not as hot. So I think now maybe just less pressure on the Swiss bank to be as aggressive, because we're seeing a lower reading in that inflation. So overall, I think I think this is still heading lower. It's just heading lower at a very slow pace. So there's a lot of consistency in this currency, but I think you just have to be patient. So I don't like trading Swiss franc right now on a shorter term time frame, but I really like it on a longer term time frame. Like this is Swiss franc is one of those currency pairs that will see that you can hold multi-day or back to back, week to week basis. I think this is showing a lot more consistency, but I think the best way to trade is on a higher time frame.
Absolutely. It is a long, slow trade, as you can see. I mean, we've just been drifting lower, but not at any sort of speed. So if you're looking to trade Swiss franc short, you do have to give it some more time. Right, let's jump into the euro here. The euro has been unexpectedly strong for me, and I've talked several times about how I could write an essay on how the euro should be weak, but the chart is proving me wrong. So the chart is always right. My opinion doesn't matter. And we just reached this new swing high, and we had a deep pullback, deeper than the last swing low. So, I'm looking at this. It's below the 20, but above the 50. We're just in no man's land. I will be interested in the euro if it can make a bounce this next week, but I'm not starting the week interested in euro whatsoever. So for me, euro's on the shelf. Pound is also kind of doing that same thing. We had a new swing high, but this is a deep pullback, deeper than the last low that we made, but still holding on to the 50-day moving average. Right now, all the momentum is to the downside on pound. I'm going to need to see the pound put in at least one or two good green days before I even get excited. So for me, pound is on the shelf as well. These are still, both the euro and pound are still looking more bullish than bearish, but just, this last week they had big pullbacks. I need to see that they're ready to bounce and get some strength back into them before I can get bullish. So I just can't start the week off with any sort of outlook on them. Take a good look at the CAD and forget it. The CAD has been absolute and utter garbage for trading. Look at all these long upper shadows. And let me just show you, if you have any any inkling of wanting to trade CAD this week, I want to point out today's candle, Friday's candle. You got an employment report that was absolutely stellar. I mean, expectations were for 11,000. It was like 110,000 jobs are created in Canada. That's such a blowout number. The CAD spiked and then it sold off. So if a great employment number can't even get the CAD to move out of this range, what can? The answer is nothing. So skip it. There should be 0 Maverick traders trading CAD this week. There's just no reason. All right, let's move over here to the Aussie. Aussie was weak all week until Friday, and then Friday had a bounce up. So ultimately, nothing really happened on the Aussie. We are at a 0 on the trend. Short term, there's a little bit of momentum to the upside. So if I had to make a trade on Aussie, I would have to make it to the long side. But to me, I just can't make a trade when a daily chart looks like this. So you can see we're having a hard time finding a lot of things. Here's Kiwi. And Kiwi was strong all week. It was strong when the market was down. Remember, the Aussie was weak when the market was down. The Kiwi was strong when the market was down, and it was strong when the market went up. That's telling you, hey, this story isn't being driven by macro trends. This is a different story. And so here we are. I think Kiwi is basically the only thing that really looks like a good buy at the first part of this week, other than the cryptos. So here we are, Kiwi and cryptos on the long side, and we like yen and Swiss franc on the downside. If we take a look at where is the momentum is, again, also in cryptos and the Kiwi. That's pretty much what we're looking to pair up. Pretty simple at the start of this next week. Kiwi crosses and cryptos. And we're going to take a look at Kiwi against things like yen, Swiss franc, and maybe even the pound. So let's go ahead and jump into those currency crosses. Those are the crosses we're going to be focusing on at the first part of the week. And then, of course, as always, we meet again on Wednesday and we update this all and we take a look at trades for the end of the week. Let's take a closer look at Ethereum first. So here is a 4-hour chart. And this is just a really, really great looking chart. We had this big run in late October. And if you take a look at what we've done on Ethereum over the past, 2 to 3 weeks, you can see it's really just been a base up here. So we had a big run, and then it expended a lot of energy and it needed to rest. All we're waiting for, this rest, is just building energy for the next run. And you can see we're literally right there. We're literally right there. So the question is, okay, where's the entry? And I think you can take a look at the entry really anywhere 1645 to 1650. And then, I mean, we're literally right there. Where is the next resistance level? And that's really what we need to look for is, okay, where is our target here on this? If we stretch this back, we can see we had some resistance there. I'm really looking at this saying, 1780. 1780 is the next resistance on this. So if we take a look at this, we have to say, you know what, we've got a decent runway here. And if we say, okay, well, how much is this? We're looking at an 8% run on this. So we got 8% once we break out of this resistance level. So Ethereum looks good. As I said, 1645 to 1650 is going to be the spot that I'm going to be looking for. The other one I want to take a look at is Kiwi. And we liked the yen and the Swiss franc short. So I'm going to take a look at Kiwi Swiss franc. And Anke, you just hit this right on the head. When you're trading Swiss franc, understand that you're dealing with a very slow moving currency right now. It's going to be a slow trade. So if this is more your style and you say, hey, you know what, I want to take a long in Kiwi Swiss franc early in the week and I'm willing to hold it for a couple of days, I think this is the currency cross you want to take a look at. As you can see here, lots of great momentum on your side. And we've really had that momentum all the way since 1st of October. This thing is going to stay strong. It's going to run up. It's going to base. It's going to run up and pull back. But we just had this base for quite a while here, at least a week here. We just broke out of that base. Look what happens when we break out of bases. We had another base back here, and we ran for almost an entire week. We definitely could be setting up for something like that. I like the Kiwi Swiss franc cross right here, right now, and I think it's ready to go. As far as where is the next resistance level, I think we got to take a look back here to, August. August we had a low, we had a little bit of support here, broke below it. So we're looking up to 59.20, 59.20. So that's only 20 pips away. That's not a huge gain. But again, as Anka said, this one moves nice and slowly and predictably. So I like the Kiwi Swiss franc. Anka, what do you think about Kiwi yen?
Hey, I actually really like Kiwi yen. I mean, I actually just like Kiwi in general. I think it just it's just a selection of what you want to pair it with. I mean, the fact that Kiwi was like one of the most underperforming currency throughout the year of 2022. I think the Kiwi has some ground to gain. And I've talked about it even comparing it to the Aussie Kiwi as well. Like we are seeing a nice reversal in Kiwi across the board. So it's just really a matter of what you want to pair with. I mean, it's the same idea if you want to just follow relative strength and weakness and just don't want to like have a whole lot of noise. I mean, it's pretty clear. We have the relative strength in the Q versus the Aussie here. So I think that trade likely to continue, and I think we can look at a basket of currencies across the board. And again, yen, I think it's moving very nicely here. So I think it's right now it just all of these Kiwi crosses actually really looks like a buy to be. Even if Rob, if you want to pull up like currency like Kiwi CAD, I mean, you can see how this also, gaining across the board, ready for a breakout as well. And I like the fact that, CAD did not break out along with a good job support today because it's just following what the US dollar is doing. So I think in the coming weeks, if the dollar continues to pull back, I think the CAD will underperform. Remember, CAD is one of those most outperforming currency this year as well. So I think there's a decent chance if the dollar corrects, I think the CAD is also coming down with it. So I think in that case, I am also focusing on CAD crosses, comparing it along with the US dollar crosses. Back to you.
Really a pretty simple outlook at the first part of the week. Really looking at cryptos long, Ethereum the best. And when it comes to Forex, we like the Kiwi. And it's not like we love anything short. We just like the Kiwi long. So I don't think it's all that important to find out exactly what to pair it against. We just like the Kiwi long. At the first part of this week, I am not interested in dollar trades, but I am absolutely watching and waiting for a potential signal. When it breaks that neckline of that head and shoulders pattern, that could be a really good short signal for dollar. I'm not starting the week off looking at any dollar trades, but I will be watching that. When it happens, I will be actively looking to short the dollar against probably the Kiwi. So keep that in mind. As always, we'll update this on Wednesday when we meet live, and we'll go through this whole process again and update everything. Everyone have a great, great weekend. Remember CPI report on Wednesday. That's going to have some fireworks, so be cautious on that one. But other than that, I think it should be another good trading week. Thank you so much for joining us. Everyone have a great weekend. Goodbye, everybody.